Alphabet earnings. Of course, we've got lots and lots of mega cap tech companies that have been reporting this week. Alphabet reported after the close last night. First quarter earnings coming in below estimates here, at least if you look at what the company said sales-wise. Excluding traffic acquisition costs, the company's revenue coming in at $56.02 billion, slightly below estimates. Adjusted earnings per share also missing estimates here. So that's what went on and why the stock is trading sharply lower. In addition, Alphabet's biggest miss was with YouTube. The online video platform saw a slowdown in sales growth for the first quarter. Revenue there was $6.87 billion. Analysts have been looking for $7.5 billion for the platform. And really here, there are concerns not just about Alphabet itself, but about the broader environment for advertising. Our friend Mark Mahaney over at Evercore ISI saying that ad softness seen in Europe as a result of Russia's invasion of Ukraine is likely to affect all of the ad platforms, right? And it affected it in a couple of ways. A, because of the pullout of many companies from Russia, but B, a lot of brands in Europe just pulling back on ad spending generally. So those two things definitely causing a hit for Alphabet and could for its competitors, Soz.
This quarter from YouTube, Julie, if you're optimistic into Facebook's earnings, perhaps you should be a little less optimistic here, because a lot of those same concerns or those negative headwinds that impacted YouTube in the quarter probably means or suggests another challenging quarter for Meta. But let's go back on Alphabet here real quickly, because it's not all bad news. Let's keep in mind, this is not the type of quarter we heard from Netflix last week. Netflix was a true bomb in terms of earnings, guidance, overall trends in its business. There was a lot of things to actually like in this Alphabet quarter outside of those YouTube sales. I'm looking at a good note by Benjamin Black over at Deutsche Bank. They are staying buyers on weakness despite that YouTube shortfall. They did they did take their target down to 2,900 from 3,150, staying a buy rating on the name. They're acknowledging weakness in advertising, but they're pointing to strong margins in that core Google search business. I know Google does a lot of other things here, but still, Google search is what Google is. That's how they make their money. And that business was very strong. So Deutsche Bank calling out some strong margins in that business and strong sales. And overall, look, the market today, Julie, is going to focus on these YouTube numbers, but there are other positives here. And I will just add again, this is not a Netflix-type quarter from this company.
Yeah, no, it doesn't seem like that there are sort of existential questions about the growth potential of the business. It seems like more it's a cyclicality issue, right? That this is what's going on in the broader economy. Informing search, by the way, is the fact that travel is coming back so strongly. So travel searches, a big part of this. The chief business officer at Google saying that travel searches in the quarter were above the pre-pandemic first quarter of 2019. So demand for those kinds of searches coming back and helping the ad business as well. The cloud business, by the way, saw sales rise about 44% to $5.8 billion. So the company's been investing in that business. It's still unprofitable as a result, as it tries to compete with Amazon and with Microsoft, which we're going to get to in a minute. So that's an important part of the business to watch as well. And then I don't think we mentioned the buyback yet, Saz, because there's so much to talk about when it comes to Alphabet. But Alphabet also announced a $70 billion stock buyback authorization. And you pointed out earlier in the week, or I think you asked a guest, are we going to see more of this? Because these stocks have pulled back so much. You know, if Elon Musk isn't coming in and buying companies, are companies going to be buying their own shares because they see value there? At least in the case of Alphabet, the answer to that is yes.
Well, thank you for that pat on the back, Julie. As you know, we are forward thinkers here at Yahoo Finance Live. And here's the next thing. It's very likely when Apple reports earnings tomorrow after the close, they will announce potentially a nearly $100 billion stock buyback plan. That's the rumors and speculation on the street. So that's the next big buyback plan likely to come. And Julie, I mentioned this too before we get to Microsoft. Some other little nuggets in here worth mentioning outside of Alphabet, not driving the stock per se, but a couple things worth noting. In that other bet segment, Alphabet noting that Waymo is now just became the first company to run fully autonomous ride-hailing operations in multiple locations. Two of those locations are San Francisco and Phoenix, so something fun there as well. And I have a story on the Yahoo Finance homepage right now, Julie, looking at Google search inquiries, and it looks like there could be a travel boom here during the summer, just based on what people are searching within the Google platform that they talked at length about. Again, that story's now on the Yahoo Finance platform. Go ahead, Julie.
Can I point out one thing here? NASDAQ futures are just ticking into the red. As I said, will it stay that way? Just 5 minutes ago, it's going to be tough to see a bounce back from yesterday's losses with Alphabet as deeply in the red as it is, and with people really focused on this broader question of ad spending and how these big tech companies are going to do.
Well,
and Meta's coming. So that's another.
The bear rate has continued in these tech names. It's fintech, it's other names in big tech, but it's interesting. We didn't really get that bearishness in this Microsoft report, Julie. By and large, outside of Surface revenues, a good strong quarter from Microsoft and what it does. PCs and Windows and even a search platform like Bing, advertising revenues look pretty good in that Bing search business. Also, LinkedIn, very strong for Microsoft. Of course, not as tied or levered to the ad market that is Microsoft compared to Alphabet, but still. That earnings call, Julie, didn't strike me as a company heading into a dark abyss or that is worried about a recession here. Didn't really hear any concerns about an economic slowdown on that Microsoft earnings call last night, of course, led by Satya Nadella. Yeah, and the cloud business here, as you alluded to, the cloud business overall was up 32% to $23.4 billion. Azure in particular was up 46%. So growth in Azure a little more rapid than the growth that we saw for Alphabet's cloud business. And you see there the cloud services up 26% there. And also the Xbox hardware business is on there, and the increase it saw 14%. Gaming revenue overall was up by about 6% here. That Xbox hardware is the console sales specifically. And remember, of course, Activision Blizzard, that acquisition is in process, that $75 billion offer for that company, although Activision came out with numbers earlier in the week that were not great. So we'll see how that integration ends up going once that closes and how much that ends up contributing to the business. And our mission here to connect the dots for investors continues. Two things I want to note here. One, you mentioned Azure. Microsoft called out the number of $100 million plus Azure deals more than doubled year over year in the quarter. And immediately, Julie, that has me thinking, well, Microsoft is likely taking market share from an Amazon Web Services, likely taking share from Google Cloud. Google Cloud had a decent quarter, but still that Azure number is a very strong and impressive number. And then secondarily, Inez was talking about this yesterday, Julie, just that continued pressure on shares of Zoom. And I look at what Microsoft Teams has done here, now starting to roll out Microsoft phones that will compete directly with that Zoom phone that Zoom has been looking to really drive a lot of strong sales and profits with. So Microsoft's coming for Zoom. And I think that development of Microsoft Teams is one reason among many why Zoom stock has been under pressure. Even despite all of this, Microsoft, like the rest of the tech complex, reached its record back in November and has fallen since then. So what's been interesting to me is there are degrees, of course, to sell-off. A Netflix sell-off is not a Microsoft sell-off. But at the same time, almost everything has been a sell-off, right? So we have seen this almost indiscriminate selling within large cap technology. I'm really curious to see, Soz, if going forward, particularly after this quarter, we are going to start to see that shift. We certainly have been talking to investors who have said they like some things within technology. Is Microsoft going to be one of those things that starts to gain a little more traction? If you look at the stock chart, that hasn't really happened over the past few months, but we'll see if it starts to shift. But it should. It really should, Julie, because look, I think Netflix, this quarter from Microsoft really highlights that Netflix needs to find something else. It needs to, if it wants to get into video games in a big way, go out there and buy a video game company, because I think what you're seeing with Microsoft, why the stock has held up relatively well in this tech route, it does other stuff, and it does it really, really well, and it makes a lot of money from it, and the market likes all that.